thank you, by the way, for the people joining us virtually. We also have people, just so we can show y'all what's going on here. We also got some in-person meetings. So thank y'all for people who joining virtual. We also got some in-person, but yeah, thank y'all.
So hello, everybody. I'm Bennett Rosin. I'm the president of the Investment Society. Woo! For those of you who are online, feel free to drop questions in the chat. You guys are right in front of me, so I'll be seeing that. And I believe you guys can see the screen. And what would be a hybrid Zoom? Technical difficulties, right? So I apologize, we're starting 2 minutes late, but I want to thank everybody for coming in person and online. Really do appreciate y'all. We got a great meeting tonight. So welcome to the Investment Society. Woo. Sweet. To start, I'm going to show you guys this quote. So the desire to perform all the time is usually a barrier to performing over time. As you guys know, this past 2 years, a lot of bumps, a lot of ups and downs in a lot of different markets. If you guys are finance majors, you know this. So being able to perform all the time is not always possible. So take it from Robert Olson here. Focus on performing over time because that's where you're going to make the majority of your money, right? Moving on from that, I want to kind of mention this. We talked about it in our last meeting. For those of you who weren't there, we're going to set up a market watch competition. I was in charge of it last semester, but I'm going to be working with Bond over here, and I'm setting that up for y'all. And that's basically where we're going to give you guys fake money, right? And you guys are going to be able to use that to buy your stocks, build your own portfolio. It's going to be a good amount of money. I remember I was mad because someone beat me because they did an option on something and got a ridiculous amount of money. But we're going to do that again this semester, and there's going to be prizes at the end. Here's some results from prior market watch competitions where Tyler Matthews over here made 90.8% of his money, and he got like a $20 gift card. But it's going to be fun. I encourage all of you to join in, and we'll keep you guys updated in the Telegram chat on when that starts and stuff. Also, next, I kind of want to go over dues. So, like every other organization, we do have dues. We have a lot of things going on for y'all, so trust me, this is really, really worth it. As you guys can tell, the dues are half off. For one semester, it's going to be $20, and then for 2 semesters, $35. And it's a better incentive on coming to our meetings. We're also going to be giving out gift cards. So for those of you who attend the whole meeting, from beginning to end, you're going to be eligible to get this gift card every meeting. And this is going to start next meeting. So this meeting. She's going to be in charge of it. That's Anna. That's our treasurer. She's going to go around with the QR code. So make sure you scan that. And then our agenda for today, because that's enough of my spiel. We're going to go over some outperforming moments. That's going to be where you guys are able to chime in. Interesting insights with us. Have the market outlook presentation from Bond, economic perspective from Eduardo, mergers and acquisitions from Jabari, and then we're going to move on to the sweet spot by Ron Sweet. So let's start by, let me ask, do you guys have any outperforming moments you guys have had?
What is an outperforming moment?
What is an outperforming moment? Good question. So I put here, how have you outperformed? And this is anything from you rode the bike for the first time in a year, to I passed my test, to I just landed a job with Frostbank. It'd be anything where you felt accomplished and like you're proud. Don't.
I can start us off.
Yeah.
So, hi guys, ready to be out. My outperforming moment is this summer. I completed my very first internship at a commercial real estate company called CBRE in San Antonio. We got an office downtown, and I learned a lot. It was a great experience, but yeah, that was my outperforming moment.
No. Anybody else? Anyone on Zoom? Carlos Rodriguez said that he got a job offer with Mondelez after his internship. So good job. We also have Lewis, who got 2 final round interviews for BlackRock next week.
Oh, that's
nice.
Anyone here? Feel free, don't be shy. Start to get like me through this.
Anybody go swimming for the first time? Yeah.
I guess I can go, but it's for this summer, I went to UTSA art services. I was on a full-time decision at food, so.
Okay, nice. Sweet.
One more, come on. One more. It can be something small too. It doesn't have to be like a job.
Big break, even on mining rig. Asphalt.
Oh,
Hey, nice. Okay, perfect. So now we're gonna move on to the actual presentations. I'm actually gonna move on to market outlook first. Let me change my screen. Give me 1 second. So Bond, if you want to come up here, everyone give a round of applause for Bond.
How's everybody doing today? Good to see everyone. I've been noticing a lot of job postings out there. Many companies have been hiring by the thousands. As I look on LinkedIn for job postings, I can see lots and lots of stuff. It's almost hard to narrow down decisions. So get excited, get some stuff on your resume so that you can stand out. I wanted to go over some history with you here. This is the S&P 500 going back to 1871. The lesson I wanted to point out is something called reversion to the mean. The mean is the average. Reversion to the mean involves retracing a condition back to its long-run average state. The concept assumes that a level that strays far from the long-term norm or trend will return again, reverting back to its understood state. That red line there, that is the average or trend line. The only thing that we can be sure of is that we are going to go back to that line there. It's just a matter of when, and it's a hard thing to predict. A lot of people are saying that our recessions are becoming shorter, more extreme, and they're having faster recoveries. And you can see these long curves here. A lot of people are saying that our recessions nowadays are going to be more like a heart rate monitor at a hospital that kind of goes up and down. The point that I want to make is that throughout the Spanish-American War, World War I, Great Depression, World War II, the nuclear bomb getting dropped, we've prospered. In World War II, 3% of the world's population died. There's 2.3 billion people on the planet, 70 million people died. It's 3%. And we can see the stock market here is below average, but it's still did pretty well. So we need to be careful betting against the market. One thing we can see from this graph is that we know that production and innovation are going to triumph over fear. And that on the average, the S&P doubles every 8 to 10 years. Now you can see here in 1960, you probably could have put $1 million in the stock market, and in 1980 right here, taken it out and not made any money. But the next 20 years, if you would have kept it in from 1980 over here to 2000, you would have made a lot of money. So timing is just something that is impossible to do. Talking about, here is S&P 500 going back to 1985. We can see the market housing crash here, or I'm sorry, the technology crash, the marketing housing crash, and the COVID crash, and how since 2007, we have just been on an almost straight upward trend. And in the past 2 years, just been killing it. I mean, straight 45-degree angle for 2 years is pretty insane. Does anybody know what a big day for the S&P 500 would be, percentage-wise? What would you consider? 3%? That would be a very, very big day. Yeah, 1% would be considered a big day. 1% does not happen very often. So if you're in an interview and the stock market's gone up 1% and you're the person interviewing you says, what do you think about the stock market? You can be like, well, it was a big day today, rather than being, I think it did well. So that's going to help a lot. Another one of my favorite charts to look at, the returns of the S&P 500s from 1928 to 2019. You can see these outliers here. 1931, the Great Depression, lost probably about 45%. After this World War II, it gained, about 55%. We can see these big losses over here, 2000, 2001, 2002. That would have been a rough 3 years to be in the stock market. You probably lost 10%, 20%, and then 30% in those 3 years. This is the Russell 2000 compared to the S&P 500. We can see how much better the 2,000 smallest stocks have done compared to the 500 biggest stocks. There's 4,000 stocks total in the market. So looking at these small ones, the reason they did better in the past year is we've been booming. When you're booming, it's much easier for a $1 billion company to double and go to 2 billion or 3 billion than it is for a $500 billion company to go to a $500 billion company to go to $1 trillion. So opposite when it's in a recession, the small companies are the ones that go out of business and the big companies are the ones that stick around. So you can imagine that it would be flipped if we were in a recession. Real quickly, gold is at 1778. Last year it was over 2,000, so it's down a couple $100 from its all-time high of last year. Bitcoin's at 42,286. That's down from earlier this year of around 60,000. And oil's at $72. And probably about 10 years ago, I believe, it was over 100. So just keep those numbers in mind as we go forward in weeks and what we're talking about. These companies, 1970s, if we look at them, General Motors, Ford, Chrysler, ExxonMobil, Texaco, Gulf Oil, Chevron, it's just oil manufacturing companies. If you look at the ones from the 90s, all of them are switched. It's all Radio Shacks. And then if you look at the ones from today, I believe the only company in there that's not technology based is Berkshire Hathaway. Every other one in there is going to be looking, these tech companies, they are born, they grow, and they die much quicker than those companies from the 70s. Look at Yahoo. Yahoo was around for 20 years. It grew really fast, and then it died pretty quickly. We can get into some earnings. Why are earnings important? They are the only thing that are to provide definitive proof of a company's profitability. A company can say all they want about how good or bad they did, but it's not until you look at those earnings and get deep into those numbers where you can actually tell how much is between the lines. So Adobe, the software giant, reported its latest earnings yesterday. Over the past 6 months, Adobe has risen 45%. They have been benefiting from business migrating to the cloud computing. From what I can see, their stock didn't have a lot of reaction today from the announcement. FedEx also announced yesterday, since August, their share price has decreased 8%. Despite being the air being let out of the stock, they continue to be running at full speed. The Memphis, Tennessee company has announced they're hiring 90,000 employees for its warehouses and packaging sorting centers. The company is also hiring 500 specialized workers to fill positions such as data scientists and software engineers. I checked this morning and FedEx was down 6% so far. General Mills, they're known for producing Cheerios, Haagen-Dazs ice cream, and Yoplait yogurt. They've been roughly flat all year at $58. I believe their earnings were announced today. I have not checked on that. Nike, they're tomorrow. The last time the Oregon-based company announced earnings in June, their stock jumped 18%. Still up 11% on the year. Since June, Nike has announced supply chain issues with factories shutting down in Asia due to COVID. The factories that were forced to halt, they make more than half of Nike sneakers. However, the analysts are still bullish on a lot of on Nike. Tomorrow, Costco, they announce their earnings always serve as an indicator for how consumer spending is performing in the Seattle-based warehouse company. Costco's business has been going bonkers since COVID arrived. Costco stock has risen 33% over the past 12 months. The trend line has been straight up since March, and Costco shares are now trading at $460. That's up from $320 in March. Some brief news announcements. How do I switch screens, Miguel? SpaceX launched one of its Dragon capsules from Florida into space. First civilian crew to go and they circled the planet for 3 days. I find it interesting how each one of these missions just kind of seems to one up each other. CGM, one of the world's biggest container shipping firms, took the industry by surprise when it announced a cap on spot rates for ocean freight. The cost of shipping the standard for a large container is 4 times higher than it was a year ago. The reasons include mostly congestion at the ports. CGM, it's a weird name for a company, I think, describes this as an unprecedented situation and is capping their prices to keep their customers happy. A federal judge in California gave her verdict in the closely watched battle between Epic Games, which is basically Fortnite, and Apple. It was mostly, but not entirely, good news for Apple. The judge said that Epic failed to provide a central claim that Apple was abusing its market dominance by charging developers commissions of up to 30%. She ruled that Apple had broken California law and ordered it to allow app developers to offer customers alternative payment options outside of Apple's ecosystem. I find this interesting because this is shaping the future of the internet and privacy and ads and how much fake news that we're allowed to see. Right now, I think that 80%, 70% of the news out there is fake on social media. So it's hard for me to argue with somebody who gets their news from an unreliable source. I don't think that WorldStar has a very big fact-checking department. I was reading an article about how the most common way Instagram, TikTok, Facebook gets you to keep your eye on everything. They tell you a bunch of true statements and a bunch of bullet graphs or paragraphs and sentences, and then the very last thing that they say is wrong. And I've checked this out a few times on just things that sound good, but then the last thing, I'm just like, no way that's true. And it's completely right. The last thing has been false on the 3 things that I checked. So remember that if you are doing anything for 2 hours a day, whether it's watching TV or on social media, that's 1 month of your life that you have just given to that. The only thing that these sites care about is showing you what you want to see so that you continue to keep your eyes glued. The biggest news this week is probably the Chinese real estate company Evergrande. They are basically not able to pay the interest on their debt. They are likely to default tomorrow on their $84 million bond interest payment. The Chinese housing company is the 2nd largest real estate developer by revenue, with 80 billion in sales last year, and liabilities equal to about 2% of the country's gross domestic product. We saw on Monday the S&P go down by 2%. We know that that's a big day, and it's mainly because of the potential for a ripple effect from what was looking like a Chinese housing market crash. It's going to be something to keep our eye on this week because it has the potential to cause a global meltdown similar to the way in 2008 the United States housing market crash caused a global meltdown. So keep your eye on that. Closing up. I have not found a single stock, a real estate investment, a Bitcoin, baseball card, gold, or anything else that has given me any higher returns than investing in myself. You are the best investment. Start investing in yourself now. The returns are insane. I love talking, anything educational, work related. Here's my email, phone number, LinkedIn. Feel free to give me a call. And I'm going to give it to Eduardo.
Hello, everyone. I'm Eduardo. Now we're going to start with the event. For an overview, we're going to start with the jobs report. Was it good? Was it bad? What did the economy expected? Then we're going to talk a little bit about the Federal Reserve, an update what the interest rates they set up right now, and their bond purchases. We're going to go to the European energy prices. Right now, it's been a bit chaotic. There's a lot of inflation going on over there with gas prices. Going to go into that and a podcast recommendation. So a jobs report. The unemployment rose by 235,000 in August. Bad. They fell short of the economist's expectations of 720,000. So this is bad news. As you can see from the chart to the right, the U.S. job growth has been fairly good since COVID. And actually last on July, we actually gained 1.053 million jobs just in the month of July. So it was pretty disappointing for August. Nonetheless, the unemployment rate fell to 5.2%, down from 5.4, which is fairly good. So that's good. We're still a couple of millions away from coming back to what we had before COVID. Next, on the labor participation. But first, economists also use an alternative unemployment tracker right now, since a lot of the COVID happened, a lot of people were discouraged to come back to work, it's called discouraged workers, and now holding part-time jobs. So I also keeping track around how this affects their actual unemployment rate, and what they're actually stating is that it's around 8.9%, which is down of 9.6%, which is also good news. Now on the labor participation rate, which tracks how many people that are actually looking for a job and people working over the working age of the population, it's currently at 63.3%. That's still fairly down. As you can see from the chart to the left, from what we had before COVID, it was at 63.3, and now at 61.7. So we still have to go back to that recovery and keep people going back to the workforce. Now into the details and why we missed expectations. So I want to focus on three of them: leisure and hospitality, government, and retail. As you can see from the month of July, leisure and hospitality, which tracks hotels, restaurants, was one of the biggest gainers. People are coming back to work, reopenings were happening, so it was all fairly good. 380,000. Then on the government jobs, it was 240,000. Now the government jobs focused on the schools and colleges, so that represented part of the government, so like teachers, staff members, they were all coming back to work. They set it up there. Now, as you look back into August, you see leisure and hospitality, which one of the highest ones, coming back to the months prior, was one of the biggest gainers, saw a net zero. Now, the reason for this is two things. One, the Delta variant, it started to come up all over the US, so there was less hiring. We were more taking back on hiring for hotels and restaurants. Secondly, it's been harder for hotels, especially to retain workers. So it's hard because they're offering wages all around the industry are becoming higher. So sometimes, for example, I saw an article recently where a hotel was hiring their workers and they didn't show up the first day. They had the option of picking and choosing where to actually work because they were offering signing bonus in different places. So it's been harder to retain those workers. And now on the retail trade, it's a similar thing. Wages aren't enough for people to come back to work, and they're actually losing more employees. Next, the Federal Reserve. So the Federal Reserve plays a huge part in the economy. They control the interest rate market. So recently when COVID happened, they lowered the interest rate on which banks can lend their money to different other banks. So their excess cash, they lend it at a certain interest rate. And this interest rate also influences the prime rate. Now the prime rate is the rate that banks offer their high credit worthy customers. So when the interest rates that the Fed lowers, there's a low interest rate, they tend to loan more money. Now loaning more money pumps up the economy. It stimulates the economy, goes better and better and faster. Now, the interest rates also used to control inflation. If inflation like we've seen recently, is high, the Fed will step in, increase the interest rate. Now, what this causes is banks to have higher interest rate. People don't tend to get less loans because they don't want to pay the higher interest rate. So there's less money coming through the economy. It cools down an overheated economy and calms down the economy. So that's like how they manage this. And it also affects long-term mortgage rates. So as we saw till a couple of months ago or last year, with the low interest rates, we saw a drop in mortgage rates when people were buying more housing. Now, the Fed, another way they use their tools is with bond purchases. So when COVID happened, they issued 120 billion bond purchases per month, 80 billion in treasury bonds and 40 billion in mortgage bonds. Now, how this works, similar to interest rate, they buy the bonds out of the economy. Now, this supplies it with money. The money supply increases for the US. There's higher money supply going around the country. More spending pumps up the economy. That's their goal. Now, with the 40 billion mortgage bonds, as you all saw, like more housing prices have been increasing. Like last month, it was up 20% for a month of July. Then in month of August, it's 14% year over year for housing prices. So there's been economists arguing like, why are we still buying 40 billion mortgage bonds if we're just heating up the housing market? It's gonna pump up more. Nonetheless, Fed officials, especially from Boston, the Fed official from Boston is arguing that the mortgage bonds just don't only help the mortgage industry, but it's all around. So we'll see. Oh, and today they announced that they're going to be increasing interest rates on 2023. But first, their goal is to stop the bond purchases before they increase interest rates. And you should be aware of those news because most of the time they affect the market. So if they say we're going to pump up, we're going to increase interest rates, hardly the market doesn't like that, especially the equity market, stocks. They don't like when interest rates are higher because they tend to prosper with high liquidity, and their models tend to price it lower rate when there's a higher interest rate. So it's important to remember to be out of the lookout for the economic news. Next is the European energy prices. So the Eurozone Consumer Price Index, the CPI, which tracks the inflation in Europe, is at an all-time high since the records began in 1996. Especially with the European, with the gas prices, as you can see from the chart to the left, the European future gas prices are at an all-time high. Now, the reason for this, it's one, the rebounding demand. So openings cause more people to open their business. They're using more electricity, using more their cars, so it requires more petroleum and gas overall. Second one is the U.S. storms that hurt Texas, especially. So when the Ice Age happened here in Texas, we stopped production, we closed plants for a temporary, and it caused the exports that go usually to Europe to slow down, which lowered the supply over there. Most recently was the hurricane in the Gulf of Mexico, which also stopped closed their oil rigs for a temporary and lowered the supply that we were exporting to Europe. Next, the EU is setting up more climate change policies, and they're closing up oil rigs, coal plants, all those kinds of stuff that pumps up the energy. They're closing it down and switching to cleaner energies. Now, those are fairly new, and they're not enough to support what the demand is actually coming up. That's why some of the prices are increasing fairly dramatically. And now, the more interesting reason is racial manipulation. So, to explain this, first, the EU supply on natural gas. So during the summer, their goal is every year to increase their stockpile in order to use it during the winter when more electricity is used. However, since the demand's high, the stockpile's being lowered at 20% average below what they usually have. So this is bad news. Now, usually they could ask their neighbor Russia, which has more oil, which pumps up, and they actually have stockpiles in Europe that they can help fill up. However, the Nord Stream 2, it's a pipeline that goes through Europe and through Germany. Now, this is very interesting. So the pipeline, which helps this company, Russia, has Gazprom, will help pump the supply that they travel through Europe. However, the European and German governments are stopping it. It's already built and everything, but they're stopping it because of over climate change issues. Now, the Russian government is not happy about this. They want this to be open to generate more cash and everything. So the Russian government, the theory is that they're lowering their supply right now and telling them, we're not gonna give you more supply. Their intent is to rise the prices of the natural gas like it's happening right now. So their goal is for Germany to bend the knee, and they say like, yeah, you can use the Nord Stream 2 oil gas pipeline, and then they'll be like, okay, you can have more gas. So that's one of the theories, and that's pretty hard for your. Lastly, podcast recommendation. So last week I talked a little bit about the private equity, which is what I'm going to do in the future. Now this podcast, you can take a picture or something, a screenshot. It's an 8-part series where they interview some of the private equity masters. They talk about their own funds and stuff, and it's very interesting. They go over how they got there, their history, what they studied, and what they're looking up in the market right now. So that's the first episode, and it's second, like it said. And I think that's it. Thank you very much. Now I'm gonna pass it to Jabari with
Hello, everybody. Good to see everybody in person, everybody on Zoom. My name is Jabari Aiken. I'm the Mergers and Acquisitions Chair for the Investment Society. Today is going to be really general. I'm not going to go into much depth about any specific mergers or any specific acquisitions. Just going to give a really good background about, kind of what is mergers and acquisitions, get you familiar with that. What do M&A analysts do? There are analysts, associates, senior execs, things like that on teams who cover mergers, cover acquisitions. So I wanted to get you familiar with, like, if this was a field that you wanted to go into, what would an entry-level analyst do? And then we're going to actually look at a job posting by JP Morgan that if you're on LinkedIn, you can actually go out there, find it. It's for, if I'm not mistaken, it's for 2022. For graduate and undergraduate students fresh out of college, but it's for an entry-level analyst position. So I wanted y'all to see that so you can kind of get familiar with that. And then, like I said, next week, we'll go more in detail about specific things like that. So these are the largest mergers of all time. You might recognize a few of them, AT&T and Time Warner. That was pretty recent, 2018, pretty big merger, $108 billion. Heinz and Kraft in 2015, another pretty big one, $100 million. And then if you go all the way up to the top, AOL and Time Warner. I don't know if anybody even remembers, AOL at all. But AOL and Time Warner, 2000. $182 billion. And then I have no idea the two companies at the top. I don't even know those two companies anymore, either one of them, but huge merger, $202 billion, 1999. And then, like I said, there's more on this list. These are just the largest of all time. You'll see a lot of mergers that we'll look into, especially SPAC mergers, which have become a really big thing recently. SPAC mergers usually aren't going to get this big. They're going to be about 20 billion, 5 billion, and 5 billion is a lot of money to me, but for mergers and acquisitions, that's not really big at all. So, I just went too far. Went way too far. Hold on. Okay, there we go. All right. So, what is mergers and acquisitions? The terms are kind of used interchangeably a lot, but they have very different meanings. An acquisition, as it kind of says, is one company outright purchasing the other. So in a deal like that, the company that gets purchased is going to just literally be consumed by the other company. It's going to become a part of the company that purchased them. Whereas a merger is two separate companies are going to come together to create a new company. Here are the main 4 structures of a merger. The horizontal and vertical mergers are the 2 most common. A horizontal merger is 2 companies in direct competition, sharing the same product lines and markets. They're going to merge together. A vertical merger would be a customer and a company or a supplier merging as one. So for example, think like if an ice cream company and a company that made ice cream cones came together and merged as one company. That'd be a good example. And then congeneric, this is when two companies that serve the same customer base, but in a different way, merge together. So think if a TV company and a cable company came together to merge together, that would be a good example of a congeneric merger. And then a conglomeration, this is basically two companies that really almost have nothing to do with each other, but they're kind of coming together, deciding to come into one company. This is very uncommon. Usually when you merge together with a company, it's for a clear purpose. So this is very uncommon, but still worth noting. All right, so what do analysts do? First, I'll say it's a very time-consuming job. So if you want to get into this field, same with investment banking. A lot of analysts come from an investment banking background. If you want to get into this field, expect to work long hours, expect to work a lot. So they do the majority of the preliminary legwork, a lot of the busy work. They're going to analyze the industry prospects, gather info about growth, competitors, market share, all the possibilities from that. They're going to review the company fundamentals and financials, and then they're going to put all that together into a really nice pitch, ship it off to the management for approval. Whether it gets approved or not, that's a part of the job. A lot of times they don't get approved. And then the ones that do, we hear about them on the news, and then I'll bring those to you. But it's a long process, usually months at a time. You're sitting there, you're working on one pitch for your manager. So this might be 3, 4, 5 months of just putting in work on one pitch. And then as it gets closer and closer to the time, your hours and your days will get longer. So they'll go from 12-hour days to 15-hour days. And when the pitch is due, it'll be 18-hour days. And so it's long hours for sure. An entry-level analyst will come in to work on a team. Usually it's going to be a couple senior execs on that team, a couple associates, right? And then you're going to come in and you're going to do a lot of the legwork, a lot of the groundwork to make sure that the merger gets off the ground and make sure that it's a good merger. Smaller firms for entry-level analysts are usually more ideal as far as if you want to learn more, you're going to get more hands-on experience, you're going to get more involved, you're going to do a lot more work. You might take on a couple of tasks that maybe an associate at a bigger bank might have. But again, the smaller firms, they don't necessarily have the people to just, delegate you to one specific task and delegate this guy to one specific task. So you'll get a very good broad background in the industry and in the work. Larger banks, larger firms, like I said, the analysts usually have a little bit lighter workload. Don't mistake that for a light workload, because it's not a light workload. And then you're usually going to specialize rather than having a lot of variation. So they're going to put you on a specific task for you to complete. And then I'm not going to read all of this, but this is just a post from JP Morgan. Like I said, I just kind of wanted you to see what their requirements are, what they're looking for, what that job will kind of entail. As I said before, prior work experience in investment banking, front office or related role, a lot of the analysts they're gonna want you to have some experience in investment banking, some background in that, strong accounting, finance, quantitative, and business writing skills, a well-rounded academic background from a top-tier educational institution. I'm not necessarily sure how important that is to the industry. I know that that's something that a lot of the top firms will say. There's some smaller firms where this isn't necessarily as important. The one that'll be more important is a strong academic background, not necessarily you don't necessarily have to come from Harvard is what I'm getting at. It's okay if you come from UTSA. And I'm not talking about UTSA, but you don't have to come from Harvard or UPenn, you're good. But understand the transaction cycle and steps in the process, and it's execution oriented. So basically they just want to make sure that you understand what you're doing, and that you're not, you understand that you have to execute, you have to get things done. And again, this is just for the analyst role. The analyst is at the bottom of the team. He's like the low man on the totem pole. So just to kind of, again, get you familiar with kind of the requirements, what you're looking at, some of the things that you'll be asked to do, communication skills, able to communicate effectively with clients, professionals, stakeholders, and then self-directed, highly motivated. Everybody wants that. So, and that's actually it for me. That's it for me. I think I'm passing it on to Professor Sweet next for the sweet spot. Thank y'all for coming.
We're going to restart our classes in sectors. This is what we have lined up so far. We got a really good team here. The classes are in blue, the sectors are in red. We're going to be in the FSC. I'll have the final schedule. I'm hoping we're going to get a few more things added on here. But we'll have the final schedule taped to the FSC on Monday. I'll get here at 1 o'clock. Most of our meetings are on Monday and Wednesdays. That's usually when most people have their classes on Tuesday, Thursday, so that somewhat helps. They'll be in the FSC. We're still working on getting the machines fixed in the FSC. So hopefully the IT people will get those fixed, so we'll have some good machines. So it's a chance for you, first of all, to learn without having exam and paper stress. You can just sit there and just listen and learn. We've got some really hot topics there too as well. We've got a couple of Bitcoins and cryptocurrency topics there. We got some Excel topics, foreign exchange. So a lot of topics if you don't have a good, strong background on those yet, and you want to jump into them in a relaxed way. The classes last 45 minutes or so. Just depends on when the person that's teaching it finishes it. So if you're interested in these, take down, get their emails so you can maybe check in with them. But if you don't have to register in advance and just show up. Now, if we have too many people show up at once, we'll see how we'll work the crowd. Usually 5 or 6 people are in that class, which is just about right, because then you can kind of build your network. We do have others that we could add. We do have some other sectors. We do need, it'd be nice to have a class on Bloomberg functions. So if someone's out there thinking, I'm going to talk a little bit about why you might want to teach a class or do a sector, I'll get into that. But we do have some others that you could do. The sector teams, it's the fall, we teach you how to screen for stocks and get a buy list. In the spring, we teach you how to write an analyst report. And in the spring, we're really hoping to start up the sector wars again. Who in here has done sector wars? William has, Miguel. So it's been a while, right? We didn't do them last year because of the pandemic. So sector wars, they're really, really good. It's good experience. We hire CFAs from here in town, actual portfolio managers. They've been very, very impressed in prior presentations. You make the presentation, they then grade the teams. And the team that wins gets first prize, they get cash prizes. We also have an alum who's trying to start a new scholarship, and he wants his scholarship. He wants to pick the outstanding junior analyst and outstanding senior analyst for a really pretty hefty scholarship. So there's a lot that you can do there. It looks really good on a resume. Also, one thing you really want to add is something you can talk about in an interview that distinguishes you, and the sector wars especially lets you do that. On the classes, I encourage you pick a class and then dedicate to it, because we're also starting a scholarship for the best class teacher for the semester. And you'll get to help vote and try to get your teacher to the forefront. So we're trying to, not that we're trying to bribe you into doing these kind of things, you should be doing them anyway, but we figure, you're finance major, so we throw money at it, maybe we'll get you more engaged. So I'm working with some graduate students who have a scholarship fund and they can't figure out what to do with it. I'm trying to get some of their money to be part of the scholarship. So I'm meeting with them here pretty soon. We're actually managing their money for them. They donated $4,500 and it's now up to $9,000. So we've doubled their money thanks to the stock market, but we've doubled their money. So they're kind of happy about that. We're now like, well, why don't you spend some of it on us? Spend some of it on us since we doubled your money. All right, any questions on that? I want to talk a little bit. I want to encourage, see if I can get a few more people to talk about the class. Sure. Yeah, if y'all want to, any of y'all want to talk about your own class?
Hello, everyone. My name is Miguel. So I'm going to be teaching the Crypto 101 class. I'm sure everyone can see me here. If you're interested in cryptocurrencies, it's a hot topic right now. I've kind of fallen deep down the rabbit hole so far that I actually have a mining rig in my apartment. I got 3 GPUs running and I'm producing a little bit. I'm mining Ethereum and Ravencoin. I want to teach you all about it. Like, I want to spread the knowledge that I have. I'm definitely still learning, and there's so much to learn about crypto and the DeFi space as a whole. So we're going to learn together, and that's what the class is going to be about, crypto. If you're interested, Wednesdays at 6 p.m., a little bit before the meeting, right down there at the FSC, and it's going to be informational. We're going to get to know each other, and then hopefully I can teach you all how to build your own mining rig if you're interested.
Anybody else want to push their class? Feel free to email them. I'm volunteering them to answer your emails, but email them if you're interested in what they're doing.
One more thing I want to
Wow, he's going to really push.
One more thing I want to say is that I highly encourage you to either sign up for one class or one sector. This, going to the general meetings is great, and you're going to gain a lot from that. And everyone should go to as many as possible. But going to the classes and the sectors, that's how you become from just a general member who shows up to the meetings to being involved in society and genuinely getting something, taking away from something from the society at UTSA. So really, I'd highly encourage you to sign up, find whatever time works best for you, get either one sector or one class. You're gonna learn a lot in the sectors with Excel. So really try to get into one of those. And the classes, those are just food for your brain. So please try to fit this in your schedule and, really think about this a lot. It's this is the best way to stay involved with society and to, keep in touch with everyone. So I highly encourage you.
And related to that, I want to show y'all, not that, I gotta see if I can find, there it is. So, second. How do I increase the size here? Boy, it's hard to do. You only have one hand, so. Whoa, there you go.
Too much.
You can read that. All right, this is my blog. This is my blog on what I think a successful college student looks like. And I want to real quickly, real fast read through this. You can read it yourself. Just do Professor Sweet Musings and you'll find my blog.
I think that's the best it's going to get.
Yeah, you can't read it, but I'll tell you, the first thing I say is you've got to be engaged in your classes. I've got a lot of students that say, I got this blow-off class. There's no such thing as a blow-off class. All right? Every class has got to be valuable. What if you have a professor who doesn't teach the way you want to be taught and you're not learning well? Well, it's your money, so you have the right to demand that the professor do a better job. You may not want to do it too harshly since they're grading you, but if a professor's not giving you what you need to go to them. Hopefully this doesn't happen at UTSA, but I hear students talking about professors reading PowerPoints to them. Who wants to read PowerPoint slides? You can read, you don't need a professor to read to you. I have students, professors assume you don't read the book. You should be reading the book. Not only should you read the book, but you should be Googling terms that you read in the book. And a professor says something, you should be saying, how do you know that's true? Where did you see that? Can you prove that that's true? Or you just get that out of the textbook? You're going to find some professors, they seem really bored with their topic, but they're not bored with their topic. They've just given up on students. So you need to be the one who comes back and gets them re-engaged. They're very smart people. They've studied their field. I don't mean just in your business classes. I mean your history classes, your government classes. Be engaged. So go to class prepared, read in advance, do some studies. Focus on learning and retention, not on grades. Grades are important, but they're not that important. In fact, grades can actually harm you. I have some students that have a 4.0 and it's crushing them. They're like so set on that 4.0 that they're going to avoid hard classes. You know, they're so focused on the grades. Given a few B's, even an occasional C. I got 1 C in my undergraduate in an English class. I just didn't like the class at all. But you know, a few B's. You definitely want to get above the 3 if you can. Really good to get above 3.5. Once you get 3.5, no one cares. All right. And some employers of 4.0, they actually do it negatively because they assume you avoided all the hard stuff to protect it. So, I mean, it's nice to have a 4.0 and our students have a 4.0 because they really were engaged and all that. But you have an occasional B, it's not that big of a deal. Focus on retention. The question I ask my students the first day of class is, how much of last semester could you write down off the top of your head without any notes? Have students that tell me I couldn't even do a paragraph. And so how many hours did it take? Oh, it took 15 hours. So you can't write one paragraph about 15 hours you just took 1 month ago. Are we wasting our time here and our money? So what are you retaining? What are you learning? Don't worry about grades. Learn how to teach yourself. And that's what we're doing in investment side. Teach yourself. If you're waiting for the professor, and I have students, I get good reviews and bad reviews. My bad reviews are, he won't tell me exactly everything I'm supposed to do. I want this rubric that tells me do this, 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 and this. Guess how many rubrics you get in your finance jobs? 0. Jabari, you see what they said up there? Business writing skills. What can you do without the instructor? I remember I was sitting with a student at Excel, and he kept saying, what I do next, what I do next. And I was trying not to be mean, but I said, okay, I've got like 10 students who did this whole thing on their own watching a YouTube. So that's fine. I'll tell you what to do next. But when are you going to figure out what to do next without a professor sitting there? Because guess what? I may not be sitting there your next 50 years of your career. I might be in a nursing home somewhere. So you're going to have to figure out how to teach yourself, and you need to have a proof how to show your employer that you know how to teach yourself. And the investment society gives you that opportunity. You've got to build a quality portfolio. So if you're in classes that are all multiple choice exams, you're in the wrong class, especially in your major. You need to be writing papers, doing projects, and professors hate grading papers. And so a lot of professors, they do team projects, right? That's killing you. You can't be doing, I know Carlos had my class, they had to do a team project. He's in honors college, they require me to do a team project. I don't like team projects. But it kills me to grade all the papers, but you gotta do papers, right, Bon? You gotta write a paper in my class, don't you? And Fernando, you are writing papers, and they're writing what, 9 papers in my class? It's gonna kill me, but you gotta do that. You gotta have something you can show an employer that this is what I can do. I remember one student handed a paper she did in my class, and the interviewer said, oh, was this a team project? She said, no, I did this myself. She made it to the next level of interviews because they're so used to team projects. And I know y'all are on team projects and you do 90% of the work, but it's still a team project. You don't get that credit. You've got to write your own papers. Build your network. That's what we're here for. So many students think the network is people out in the workforce. But part of your network is UTSA students, and Investment Society is going to let you do that. That's an extremely important network. Your professors are an important network. That's why you go to class prepared. You go to your professor's office hours. You need that professor. I do recommendations. I probably average 2 recommendations a week for students that do well in my class. I've had students that do horribly in my class and ask for a recommendation. Well, what do you want me to say? But build that network. My most important thing that you do in college is you do what scares you. What scares you the most, you've got to do that, all right? I'm running out of time. I told students, you get 5 job offers, which one do you take? It's easy. You take the one that scares you the most. Finance pays you for complexity, the most complex, difficult job, that's the one you want to take. And the last one is do relax. I get students that are so stressed out because they want to plan the next 50 years of their lives. You can't do it. You got to just do what's next. And in here, I tell you what you should be doing each year. You know, we had a freshman here joining us. I forget who, someone up here was a freshman joining us. Yeah, freshman, You're doing the right thing. Get involved in the investment society. So that takes me back to those classes. If you want to teach a class, I'm going to teach a FACT review class. If you're taking the FACT, then come team teach with me. And I'll give you all the material and you can learn it in a week in advance and you can go teach it. If you don't like public speaking, then teach a class. It's a lot easier to learn how to do public speaking when you have 4 people in front of you instead of having 50 people in front of you, all right? Do what scares you. You want to be a junior analyst, think about being a senior analyst. I'll show you, I'll be there to help you do everything. The worst thing that's going to happen is you get into a bind and I'll have to step up and say, hey, let me help you out with that. And there's no shame in that, all right? So if you're interested and you just haven't stepped out, if you're, the reason you're thinking I don't want to do it is because you don't think you can do it, guess what you got to do? You got to do it. Anytime your thought process, I cannot do that, you have no choice. You just got to jump into it. We can't torture you. We can't kill you. We can't charge you $1 million. The worst that can happen is you're a little embarrassed and no one else remembers it but you anyway, because we don't think about each other as much as we think we do. So just try it. If you fail, no big deal. You've learned, you're going on, and everything's fine. All right, I'm going to stop there because I know we're running out of time. But, so if you're interested in teaching a class or doing a sector, email me.
Awesome, thank you. Yes, sir.
What day these classes start? This next month?
Yeah, so this upcoming week, all the classes should start.
Yeah.
We'll see.
Downstairs, right, from the doors.
Yeah, if you go all the way to the hallway downstairs, you see like all the
So
monitor those talks in the class.
this one right here, highlighted in yellow, that's Professor Sweet's email. If you're interested, just let Professor Sweet know. That's this one. That's the one.
Too much of y'all's time. Yeah, this is basically the end of the presentation. Thank all of you guys for showing up today. We are going to do the giveaway for the $50, and I think Anna's going to do it.
So thank you guys for coming again. And we have the raffle winner. I just auto random generator, and the winner is Wickwire.